Friends, in this video for ithought Advisor, I am going to talk to you on the topic from safety to opportunity. A number of investors played safe as the Nifty hit new highs, as the companies they always wanted to own traded at extraordinarily high PE multiples. Valuations were beyond their range of comfort and investors sought safety. This search for safety was not restricted to large caps or blue chips. It was also very much in evidence in the small and mid cap category. So, a small set of companies which everybody wanted to own were trading at valuations which they did not like. Safety was a natural choice. So, where did people seek safety? They sought safety in cash, some people sought safety in liquid funds, somebody put their money in deposits, some others put their money in gold, some put their money in commodities. So, everybody was trying to stay away from buying expensive companies. At least that's what smart money was trying to do. In the process, they were waiting for valuations to come into their zone of comfort. We all know that we have had a reasonable correction in the past few months, but it does not mean that the markets won't correct any further. The mood of the market clearly points to weakness. Selling by one section of investors, the FIIs, continues unabated. On the other side, domestic institutions are buying and investors are also pouring money into domestic institutions through the SIP route. So, liquidity is flowing from one side and getting mopped up on the other side. Naturally, that is certainly slowing the fall in the market. It's cushioning the fall. But this does not apply to the entire broader market. I feel the fall in the indices is getting nicely cushioned, but the fall outside the indices in the small cap and the mid cap and micro cap category is certainly sharper than it is in the headline indices. This means that investors are nervous, smart money is moving away from extremely expensive companies and going into cash, and nobody is in a hurry to buy an expensive company. So, in that sense, this buying the dip syndrome, which we saw for the last 2 years and which worked extremely well for investors, seems to be losing favor right now. So, people are waiting, they are deciding what they want to do and hoping that they get the opportunity to do what they want to do. Staying in safety seems to be the priority of smart investors. How long do they stay in safety? Do they just sit there and wait endlessly, or should they seek opportunity? In my view, opportunity should be selectively sought where you are comfortable with the valuation, where you are confident of investing more if the valuations turn even more in your favor. Simply sitting and watching may not help because the stock can suddenly find favor with large investors and quickly bounce beyond your zone of comfort to buy. Also, what should weigh on your mind is that other alternatives are hardly attractive, and if you find an equity investment which is attractively valued, a company which you can bet upon for 2-3 years, where you have a runway of growth, then it makes sense to deploy your money in a business rather than anywhere else. So, in that sense, investing in equity is definitely a safer bet when valuations come more in your favor. It will provide you opportunity to make higher returns when the business starts doing better, and it will give you a longer runway to grow your money. So, in that sense, the period when you should seek safety and only safety will probably come to a close over the next few weeks, and after that gradually you will find a phase when you can seek opportunity. When I say that, it does not mean there are no opportunities now. In the broader market, there are a lot of opportunities, but in the concentrated spaces like the mid cap and small cap and large cap spaces, I believe that opportunities have to become even more attractive, and closely watching them and following them is critical for you to buy them when they come into your zone of comfort. Importantly, people who don't prepare for that moment, when the stock comes into their zone of comfort, completely miss the opportunity. So the key thing for you to remember now is that you should not miss the opportunity when it comes before you, and to do that you need to prepare yourself well ahead of time and be in a state of readiness. I'm sure you heard some fantastic names of investors who have bought into such opportunities and made phenomenal returns in the last 2-3 years. There will be another breed of investors who are going to do it even this year. I'm hoping that you are also going to be in that rare breed of investors who are well prepared to seek opportunity when nobody wants to do so in the market. Thank you for watching this video. Do stay the course with us. Thank you.